make you feel right at home. Honey, does it well. Keep me dancing till I'm dead. 'Cause I could run a mile like this. Head over heels, feels like this. The sun has got me on my track. I ain't never looking back. I ain't looking back. I ain't looking back. I ain't looking back. Ain't looking back. Deep inside the depths of stone, voice will echo, need no phone. Ruled by the laws above, nature shows me, makes me taught. I could climb this mountain now, rise above the clouds and see. Well, oh, the force that kept me strong, never did I mean no wrong. 'Cause I ain't looking back. I ain't looking back. Ain't looking, ooh, ain't looking
Please welcome to the stage Meg Szabo, Managing Editor of Bloomberg Green and Sustainability Events.
Good morning, everyone. Welcome. I'm so happy to welcome you to our Bloomberg Sustainable Business Summit and welcome you here to our London office. I know I always say it, but it is one of the most sustainable office buildings in the world, so it's a perfect place for us to host this. We have a great day ahead, some conversations on driving innovation and scaling best practices in sustainable business and finance. But before we get started, just a couple of quick announcements. First, I would love to acknowledge our summit advisors, Citi Commercial Bank, Red Sea Global, and Schneider Electric. We would love to hear from you today. The Wi-Fi can be found on the back of your badge. You can also submit questions and respond to our polls today using that QR code behind me. And you can also engage with us on social media today using the hashtag SustainableBizSummit. And with that, let's get started. Please join me. And with that, let's get started. We'll begin with a conversation on demystifying ESG disclosures.
Please welcome to the stage Nicolette Bartlett, Chief Impact Officer at CDP, Emily McKenzie, Technical Director at TNFD, and Dan Neal, Social Lead at the Church Commissioners for England, for a conversation with Bloomberg's Alistair Marsh.
Hi, good morning, everyone. Welcome to Bloomberg and welcome to this opening session. So we're talking about demystifying ESG disclosures. We're going to try not to make this a session complaining about CSDDD or any other acronym that you don't like. That's for the lunch break. This session is a group of experts gathered here covering a rich variety of topics or expertise from nature to human rights and climate. And so let's get into it. Let me ask you, so in this world of sort of sustainability, there's a lot of things to be disheartened by. So let's try to start on a high note if we can. And I'll ask each of you in turn, would you tell me what one recent or upcoming development as it relates to ESG disclosures that you're most encouraged by? Dan, let's start with you.
So actually, it's not so much the disclosure, but the legislation behind the disclosure. So the CSDDD, Corporate Sustainability Due Diligence Directive, big vote yesterday for the European MEPs. That, I think, it brings together the whole of the system that was behind it, which is, if you look at SFDR, CSRD, CSDDD, but basically, it's the thing that was missing, which is the legislation that says you have a directive, here's the directive, you need to do the due diligence, and then you report against it under the CSRD. So for me, it's the legislation that actually puts the onus on companies and says you have to do these due diligence activities.
Right, so moving from talking to doing.
Yeah.
Great. Emily, how would you answer that?
Yes, I would probably talk about the very, very fresh news that was announced on Tuesday by the International Sustainability Standards Board, which agreed to move forward with two projects, one on nature, the other on human capital. But for nature, that means now we've put in place a process for moving it into the global sustainability reporting baseline. So that's the breaking news that's very exciting in the nature space.
Fantastic. And Nicolette, how about you?
Yeah, I'd echo both of those. And I think what I would draw on is the fact that this is built on a strong foundation of companies doing this globally, both for nature. But so obviously I'm speaking from the environmental perspective, not including the social, which I think is vital. But I would also just remind us of that, you know, we have, through CDP's system, we can see that companies all over the world, our second biggest disclosing country is China. Our third is Japan. The ASEAN companies that are disclosing right now are disclosing and will be disclosing this year in CDP's system, fully aligned with ISSB S2. So I kind of always want to draw down on that in the real economy, the foundation of this is really, really strong, and the legislation that is coming on top of it anchors that and ensures that everyone is coming into the process, but it's not coming out of nowhere. And that's always what kind of keeps me going when I see another acronym coming out the door.
Fantastic. Okay, well, so you say it's not coming out of nowhere. That's exactly right. You know, this sort of voluntary architecture that we're talking about, a lot of it's been developing or being developed for many years. But there are many indicators that suggest, perhaps unevenly, perhaps not at the same speed everywhere, but that we're kind of broadly moving from a voluntary world to a mandatory world. Can we talk a little bit about how far down that road we are really? And I mean, perhaps you could speak about the specialist areas that you have, but there's a lot of crossover between them. So who would like to kind of kick us off with that one? How far down the road are we?
I'm happy to start. I'd say for nature, it really depends on the jurisdiction. So at TNFD, we're not a standard, we're not a regulator, we're a voluntary market-led initiative trying to create a credible, consistent way of managing nature-related risks and opportunities and disclosing on them. But we, unlike TCFD, had to work with the regulator right from the get-go with the European regulators because European sustainability reporting standards have folded in TNFD's LEAP approach. All of our disclosures and metrics sit within that. So that's where, in that jurisdiction, it's already mandatory. There are others where it's not, and each jurisdiction will vary. So I think we're looking at a kind of a patchwork that will emerge. But I think for many jurisdictions, 130 plus jurisdictions, the decision on Tuesday by the ISSB obviously will be influential to see, because putting in place the global standards as a sort of foundation then for considering whether something would be mandatory.
I think for social, we're still the poor cousin. We are further down the road than we were on Monday, so that's good. But there's still a long way to go. Some people may be aware there's an idea of the TIFD or the TSFD, the inequality or social inequality related financial disclosure task force that's in the sort of process of working up, but it's still a way back. And part of the need for that is because, in part, ISSB has not done a social one alongside climate. And there's that gap then in terms of those international sustainability standard boards around the social topic, and particularly human rights. So we're further, but we're still quite a long way to go on the social, I think.
Okay.
We certainly are moving from but I wouldn't frame it as from one to the other. We're moving into a world where mandatory is coming in, thank goodness. This is what we've all been wanting, right? And the thing about regulation is it starts to make it real across the whole economy. It starts to put it into practice, but you still need the data on the data to work out what works, what is decision useful, because we're only at the start of the journey. And there are huge, there's a long game to go to get it into a place where you have decision useful data and that you also make a distinction for why that data is needed. So in many cases, much of the ISSB regulation coming in is focused for climate on the financial markets, financial stability. That's access to capital. That's only one of the data use cases. The others we would see is a bigger class, even from a driver perspective for, in our experience of corporate disclosure, is business risks, business opportunities, business competitiveness, we call it. And one of the biggest drivers there is buyers, supply chains, which is not just being driven by regulatory, it's being driven by the very fact that actually it's reducing their risks and opportunities by having this disclosure coming through to them. And their needs are slightly distinct from what the finance sector needs. And then you've got, obviously, what the data that companies need to collect for compliance. And all three of those are not the same thing, always. There's a huge overlap, but they're not always the same thing. So the journey is starting, and I think we're going to now be focused on bringing it into a space where it's interoperable, where it's comparable, but also where you have the data being structured and developed into decision-useful data for those different audiences and different purposes.
Can I just build on that? Because I'm fresh from a really fantastic trip to Asia last week, where I was in both Singapore and Hong Kong, and there were many there from the region. And there, for nature, they do not yet have it as mandatory, but huge interest and uptake, really framed around the way Nikki just placed it, around this being essential to their strategy, their business model, or their risk and return for their investment decisions. So it's a very exciting region in Asia. 42% of the now 370 organizations that are early adopters of the TNFD framework are in Asia. And it's really driven by that mindset rather than compliance, which means it's a very interesting, very dynamic region. We have a number of adopters who've already disclosed TNFD reports, which they can do because they've already been reporting on CDP GRI for a long time. So the foundations are there, they're getting useful insights. It's very interesting.
I deliberately started this session talking on a high because I thought we might at some point go into the valleys. And if I put my sort of cynical hat on, one might say that, if you look at the CSDD or you look at the SEC climate disclosure rule, there's sort of been, some of that's been watered down or pushed back. The SEC is facing kind of legal challenge. And there's a lot of people complaining about the cost of compliance. This is hard to do. This is difficult, and so on. And then you have, especially in the US, but it does manifest on this side of the pond, the kind of anti-ESG backlash phenomenon, whatever you want to call that. And it's interesting to think about how inevitable this shift from sort of voluntary to mandatory is, and if we're running out of steam on it. And then if you think most recently, like one of the most obvious or clear pillars of the kind of voluntary architecture, the SBTI, what's been happening there, there's questions about its credibility. I mean, rightly or wrongly, that's going to be ironed out. But I guess my question is how is this going to play out? Are we sure that this is kind of, all the things that we've described about the train's moving in that direction, is it really moving in that direction? I mean, Nicolette, you have some involvement with the SBTI. Maybe you could talk about that, but maybe you could also zoom out and talk about, is the pushback having any impact on this sort of mandatory train?
Well, I'll take a step back from that, and just the pushback generally across all of society in every jurisdiction on one element of this is happening. But I think we should be careful of calling it voluntary always. I think what we're seeing now, because it in reality hasn't always been voluntary. If investors want it, at least in our experience, if the investors want the data, if a buyer wants the data, the company leans in to disclose it. So it's not necessarily voluntary to some degree, right? And why I mention that is because I think that's part of this trend. There is the investment in the kind of new green economy is happening. That's not going away. Mm-hmm. It's delivering returns. Reducing risks is something companies literally have to do. That's their job, right? As part of their duties. And so that driver is not going to go away because it's real. It's not fluffy. It's not some voluntary thing, right? That's real. And so I think what we're seeing now is a maturing of the market and things, the ISSB forming and taking the alphabet soup in, as they love to say. That's one of those signals, right? Where things are standardizing and becoming formal inside of governance processes, all of that kind of thing. Mm-hmm. The regulation builds on those. Right? Regulation doesn't sit over here and do it all magically in the corner, even though it feels like it sometimes. It's built on norms and practices and standards bodies that actually pervade the entire financial sector and across the real economy. So I think for me, there will be pushback against regulation. There always is. And this data is actually changing and the kind of practices around the data, the standards around the data, the standards around transition plans, targets, whatever it may be, the way risk frameworks are developing, those are being standardized and are being used in very real capital alignment and access to capital decisions. So that's not going away. And so I think where we may see a focus is focusing in on what is decision useful, but it doesn't, for me, if there's a pushback, which there's always a pushback against the regulation, that doesn't mean the trend on this dies overnight.
Okay, do you guys agree?
Yeah, the need for, say, the Corporate Sustainability Due Diligence Directive, voluntary measures weren't working. Companies weren't volunteering to respect human rights. So the UN Guiding Principles, Business Human Rights came out in 2011. The UK was the first country to come up with a national action plan on business human rights. And wildly across the world, companies don't meet those fundamental expectations and they don't demonstrate that they're meeting them. So the legislation is a response to that. And a lot of companies fought very hard against that legislation, and to your point, to try and water it down and push it back. But the legislative flaw, and I think this is another point to remember with this, that the legislation is the very bare minimum, so that the companies who are active in the space can have a level playing field to work from. Because at the moment, it's a bit of a Wild West in some respects, and you can't actually do the comparison between those who don't and those who are, because they're almost at a first mover disadvantage on that. So I think it is good progress on that side. As to the pushback, That's naturally, I think, what companies are going to do. I not necessarily want to get into the ESG pushback and how that works with the culture wars in the States, because I think that's a slightly different issue to actually driving sustainability and positive outcomes.
Okay, but so what we're talking about broadly here is that sort of progress on sustainability is both forced down from the top. Maybe you don't like the word force, but forced from the top. But also there's demand from the bottom, that it's business useful, and there's yeah.
I would definitely say that we have evidence of that with TNFD, because what TNFD has created is, well, there's a D in our acronym, so people associate us with disclosure. Yeah. And yes, we're a set of disclosure recommendations. We always try to emphasize we're a risk and opportunity management framework. We give insights for strategy, for capital allocation decisions, like Nikki's emphasizing. And so we have produced, yes, a set of disclosure recommendations, but also a bundle of guidance. And one of those is a kind of due diligence process for how you assess and identify your material nature-related issues. So we can track adoption of TNFD. Only 6% were in the US of our early adopter group. But we can also track downloads of our guidance and the amount of feedback we're getting from particular regions. And both of those are very high in the US. It's just to take that as a specific region in the broader term. So I would say in terms of demand, the bottom-up demand for getting the insights that are about what are my most material issues, how are they affecting my risk, my return, my profits, everybody has huge and growing demand for that.
Excellent. Okay. Now on this, what's exciting about this panel is sort of the variety of expertise that we have. Now there's people in the room, CSO, sustainability professionals in businesses, and sustainable investors. Let's talk a little bit about how we can thread these themes together. I mean, we don't have to make it awkward or forced, but of course, if you are a CSO or you are a responsible investor, you have to think about human rights, you have to think about nature, you have to think about climate, Paris alignment, and all the rest of it. So let's talk a little bit about how these things kind of come together, how you can take an integrated approach. Who would like to open up with that one?
I'm happy to give a couple of examples. The first is that we have built from TCFD to, but on purpose, one, to start from what many, many people understand already once they start to think about nature, but also to encourage and enable an integrated approach, because as soon as people start thinking about it, you realize nature and climate are highly connected, both from the risk side, climate change being one of the drivers of nature loss, but also from the opportunity side, nature being a third of what we need for climate mitigation coming from nature as an asset, providing carbon sequestration and storage. So I see that really starting to manifest concretely, yes, in integrated disclosures. Some organizations are already doing integrated TNFD, TCFD disclosures, and ISSB will speed that process up, I'm sure. But also in our context of transition planning. So we're starting now to look at, we're developing guidance around transition planning and doing that in collaboration with GFANs, who are focusing on nature for net zero transition plans, while we take on nature for nature positive or nature goal transition plans. So that's on the climate side, where I see it really becoming real. And on the human rights side, one part of our guidance package is around engagement with Indigenous peoples, local communities, and affected stakeholders. And one of the things about nature is it manifests in real places on the ground. It is location specific, as we say. So if you're having significant impacts, negative or positive, or depending on water or some other environmental resource, it's in a particular place. And others in that community will be both stewards of nature and affected by what a business is doing. And that's why we drew on the UN Guiding Principles for Business and Human Rights on the OECD multinational guidance to develop really detailed guidance on this and the linkage with due diligence and human rights. So for me, as soon as you start seeing thinking about these issues, the connections become real, they become practical, and that's manifested in what we've written.
And I think, so the climate problem, the nature problem, they're all people problems. If people are left behind during the net zero transition, they will stop the transition, they will act against that. And it's the same, the people who are going to be a big part of that nature solution are those Indigenous peoples, those human rights defenders on there. We look at the world through 3 systemic interlinked risks of climate change, nature loss, and social inequality. And at the heart of that is that sort of respect for people that underpins the just transition bit for that. So I think in terms of the integration, I can bang the drum for social because I said it's far behind. Actually placing the understanding what the risks and impacts to people are based on your actions or inactions, I think is a critical part for that integration into how you approach climate and nature, because they're not just technical solutions. And if the people aren't part of that, your plan is not going to work.
Right, exactly.
And I think this is why the CSRD and CSDDD are bad. So it was really interesting this morning from that roundtable, just hearing the voices, and I've heard this over and over in the last year, and in every jurisdiction, so not just European companies, who are using, either they are recognizing the extent to which they now need to report into this framework. But then what they've got to is a place where they are going to, if they're already on that journey anyway, they've been doing this, they are using that as their way of integrating it within their organization and then drawing all other regulation from it. And I think that's really what, so they were actually, I mean, the word painful was used a few times, but they weren't saying it, they're not like getting warm and fluffy about it, but they are certainly noticing that it helps them to bring the things together. And I think that's a really, as it kept being said over and over again, it's a framework where we can bring all this together finally. And I think that's amazing.
I think there's huge demand for that, huge demand, because nobody wants things sliced and diced in a million different ways that don't speak to each other. Yeah. So I think that's the direction of travel.
Okay, with just a few minutes left, let me ask you a final question. I could have made this my first question, but it's a good way to end. And the question is, why does this matter? By which I mean, we're talking about disclosure frameworks and so on, but what we need to get the world on a Paris alignment trajectory, or to restore nature, or to respect human rights, is not to fill out more forms, it's to actually take action. So how does, can we talk just a little bit about how the frameworks we've discussed actually help serve that ultimate ambition?
So one slice of it is on that accountability. So outside of the business, but how investors and how broader society holds companies accountable for that. Companies are social constructs. They have a role in society, and that should hopefully be a positive role. The data that comes out enables stakeholders to hold those companies to account. And so for, as a universal investor, for instance, we're not just interested in a company making alpha when it destroys the beta in the market. And so if a company does really, really well, but trashes the rest of the economy or supports genocide or something like that, that's not really useful for us. So I think for our side, it is just one slice is that accountability, the data to actually enable informed decision making. Yeah.
I mean, I'll give 3 very dull stats, but just because that's my job. But I think we consistently see this. First of all, we can't make the decisions we need to make that are quite urgent without data. That's just a fact. It's a foundation. Disclosure drives some of that data, right? So that's an obvious point, I say that. But so we found 3 things. One is of the supply chain members in our system, so we've got 340 global multinationals that have like 6 trillion in procurement power, huge driver for change. They have driven in the last few years over 600 million tons of emissions cuts with their incentives, their rules around procurement, et cetera. And it's been driven based on the data they've received, which was driven by disclosure. And they've saved suppliers 33 billion, right? Which is a number that those suppliers really care about. When we look at the companies, so they've been supply chain members for quite some time. They've been seeing the data. 1 in 10 of them now all have a climate-related rule in their procurement, like a hard rule, not just a sort of incentive, but an actual hard rule. And so we tracked 223 companies that have disclosed consistently on water between 2015 and 2023, okay? And they've significantly reduced their water withdrawals, because that's one of the things we track consistently over time. And that's from doing it and using it as a risk framework for themselves, because actually, interestingly, we had to really build the case with investors at first about water being an access to capital issue or procurement issue. But the companies themselves started to see it as a risk management issue. So that's just those 3 very dull stats, and they seem small. We've got thousands of them where this practice and then the data itself drives a change in decisions.
Fantastic, thank you.
It's hard to follow Nikki, because Nikki's the expert with all the data of how this really drives change, but it's certainly part of our theory of change. So our theory of change is to contribute to halting and reversing biodiversity loss, which has been agreed by nearly 200 governments now around the world, by shifting financial flows away from the activities that are harming nature towards those that make it thrive, and using disclosure as a vehicle to do that. But ultimately underneath it, as I emphasize, this is really about risk and opportunity management. So what's really interesting to me is the conversation is now also really about opportunities. And the great thing about nature is you can see an upside very quickly. In fact, if you just leave nature alone, it recovers. You don't even need to actively do anything. Protected areas are great. So there's a real emphasis now, I think, on the opportunity side.
Fantastic. Unfortunately, that's all we have time for. Thank you for listening, and thank you, panelists, very much. That was quick. That was quick. Thank you.
Please welcome to the stage Shaheen Contractor, Senior ESG Analyst at Bloomberg Intelligence.
Hello everyone, thank you for joining. My presentation today is on the performance of ESG, and I'm going to share some exciting new research that we've launched that seeks to answer the 3 questions we have on the screen. So the first one, what ESG metrics impact risk and returns at the industry level? I think this is one of the main unanswered questions we have today, or debated questions. We're then going to hone in on climate metrics and ask the question, are there any performance drivers there? And then lastly, we're going to look at what drives ESG stock selection. And again, ask the question, is this the same as what drives performance? Sneak peek, it's not, leading to many risks and also opportunities. But before that, just a quick introduction. So my name is Shaheen Contractor. I cover ESG for Bloomberg Intelligence, which is Bloomberg's research team. I describe my job as sort of taking Bloomberg's ESG data and providing analysis into it. So writing about trends, drivers across many topics, climate, gender, and of course ESG performance, which I'm excited to show today. So let's come to our first research question. What ESG factors or metrics impact risk and returns? Now, I think everybody here knows that when it comes to ESG, there are often 100 different metrics that can impact a given company or industry, right? And the question is, out of this, what really drives performance or can drive performance? And that's what we seek to answer. So just as an example here, I have our Bloomberg ESG scores for a mining company. And you can see we're scoring about 15 different issues. And beneath this is about 150 different metrics. I actually stopped counting at 150, so there's more. So the breadth of this really begs the question, what ends up impacting returns? So today I'm going to showcase some results from the materials industry, so think chemicals, mining. We're going to use that as a case study. But just know that we've done this for multiple other sectors, multiple other industries, and we'll soon be covering all. So a lot more to come for you, a lot of sleepless nights for me. But let's dig into some of our results. And we're going to start with E&S metrics for these materials industries. Now, what we found is over our 6.5-year backtest, we found that within industries like chemicals and mining, the metric that really seemed to drive outperformance was our health and safety issue scores. Now, this is a key piece of our Bloomberg social scores. Right? So if you look at the chart to the right, you can see companies with better health and safety scores are outperforming those with worse health and safety scores. And this value is a minimum of about 3.5% annually, so not something that's small. If we look at the left, we can see all the issues that we're testing, so things like energy management, GHG emissions, and the chart is really asking the question, are returns better for better scoring companies? You can see the yes, no, and if so, by how much. So again, you'll see it's really health and safety that has got the biggest benefit over there. So health and safety for chemicals and mining. But what about governance? Are there any performance drivers there? So when it comes to governance, we actually found there was no performance driver, but the main benefit was in reducing drawdowns. In other words, I think of this as reducing downside risk. Think of drawdowns as sort of the maximum your portfolio can lose over a period of time. And I think this makes sense, right? Because when you think of governance, you think of these large one-off events that can happen from poor board oversight or poor audit governance, things like that. Now, you can see here for all the for all these materials industries, we've tested our Bloomberg governance score and then its components. So we have board composition, executive compensation, etc. But what I find interesting is the biggest benefit that we see is within the shareholder rights issue category. And we can see that across all industries, drawdowns for better scoring companies are lower by at least 5%. And I say at least 5% because I think 5% is substantial enough. The other issues you can see vary a little bit, are not that consistent. And again, I think this makes sense, right? If you think of companies with poor shareholder rights, I think that can exasperate underperformance if the company is mismanaged. And the classic example I have is of Facebook, well, now Meta. But when the Cambridge Analytica scandal broke, no shareholder could really do anything because Zuckerberg controlled all the voting power, and hence Facebook continued to underperform. So it's when a company is mismanaged that poor shareholder rights can really exasperate underperformance, and that's what we see in our quantitative analysis, at least. So let's flip into climate metrics. Now, just a note, we previously looked at scores. We're now going to dig into underlying metrics, slightly more objective, but I'll stop there. So we found that within some of the most resource-intensive industries, so steel, aluminum, cement, we found carbon intensity to be a driver of performance. So here you can see companies with a lower carbon intensity are outperforming those with a higher carbon intensity. And I won't spit out numbers, but for something like steel, for example, it's about, I think, something around 8% per year over this is a 5.5-year back test. And I'll mention that, all these back tests, they're region neutral, size neutral, beta neutral. So I won't go into details, but we're trying to control for as much as we can that might drive things other than these factors that we're testing. So for steel, for example, again, I think this makes intuitive sense. The fundamental linkage that I like to draw is your lower intensity steel producers use a lot of recycled steel, and this is much less susceptible to supply chain risk, commodity price spikes, carbon programs than your higher intensity peers. So I always like to try to draw that fundamental linkage. And I'll just say this carbon intensity metric is carbon per ton of production in all cases, and it's something that's curated by our analysts. So it's a pretty strong data set. And then I'll also add that I expect to see this for the resource-intensive sectors. I don't think I expect to see this for like technology or healthcare. And I think that just points to the industry-specific nature of ESG, which is why we're doing this analysis at the industry level. Now, let's come to our last question. What drives ESG stock selection? In other words, what drives ESG fund inclusion? And we do this by looking at the correlation between certain ESG metrics and this metric called the ESG fund inclusion rate, which is basically how popular are you in ESG funds. Now, you can argue a greater correlation means, the higher you do on that metric, the better you do on that metric, the more included you are in ESG funds, and hence that matters in stock selection, right? If there's no correlation, then I would argue that maybe it doesn't matter. Fund managers aren't considering this. So when we ask this question for shareholder rights, does shareholder rights drive ESG fund inclusion? The answer is no, right? There is no correlation between these two metrics. And it's very clear that a higher shareholder rights score doesn't lead you to be included in more ESG funds, suggesting it doesn't matter. Now, that's a bit of a shame, right? Because we saw in our previous slides that shareholder rights was one of the governance themes that resulted in lower drawdowns. So it does have that performance benefit, but it's not being considered in ESG funds. Now, while this is not being considered, what is considered is carbon ambition. I don't think that's a surprise to anybody, but it's good to put a quantitative figure on this. So you can see about a 42% correlation between our BI carbon forecast scores and the ESG fund inclusion rate. And I'll just mention these scores seek to score a company based on their carbon reduction goals versus a temperature-aligned benchmark. So obviously, higher the score, the more ambitious. Now, we can see that this correlation is actually the strongest for steel and cement. It's above 60%, which is quite strong, suggesting that carbon ambition matters the most for these industries. It's less for something like metals and mining. And one can argue here that if you believe ESG funds are going to continue to grow, companies with better carbon ambition can continue to see access to more capital and all this wider investor base benefits that we keep saying better ESG will lead to, right? Whereas for shareholder rights, it might not. And that brings me to the end of my presentation. I'll just go through some quick key takeaways. So what we really used is we used materials as a case study. And in terms of risk and returns, I'll just rattle off the metrics because I think I'm out of time. But we found benefits in safety, strong shareholder rights, carbon intensity. And then when we look at what drives stock selection, it's really carbon ambition, not something like shareholder rights, which we found to impact performance. So that brings me to the end of my presentation. I'll just add that this is for the materials sector, but know that we're going to launch this for a lot more sectors, so a lot more to come. You can find all this on our dashboard, BI space ESG. Thank you, everyone. Enjoy the rest of the conference.
At Citi Commercial Bank, we help fast-growing companies expand into new markets across the world. For our clients, every day can bring new opportunities to capture and new problems to solve. When a client enters a new market, Citi is there, with teams on the ground providing the local market expertise they need to hit the ground running. So wherever business takes our clients, with Citi Commercial Bank, their future looks bright. For the love of moving businesses forward, for the love of progress.
Please welcome to the stage Kelly Becker, President UK and Ireland at Schneider Electric, and Rashmi Ghai, Global Head of Sustainability and ESG at Citi Commercial Bank, for a conversation with Bloomberg's Duncan Chater.
Good morning, everyone. So we have a very exciting conversation ahead of us. Today, I think what we're going to be covering really is some of the complexities around the ESG landscape and the shrinking net zero timeline really demand collaboration to drive meaningful progress. So over the next 25 minutes, we're really looking at how large multinationals can leverage their resources to accelerate these efforts to the vital middle market. And I'm delighted to be joined today to have this discussion with two experts in Kelly and Rashmi. So welcome. And we're going to be looking to highlight the role that big businesses can play in helping this important mid-market companies meet their decarbonisation goals and integrate sustainability into their business models. So, as our conversation is focusing on the challenges of integrating sustainability into the middle market, I think a really good place for us to start to drive some clarity for the room, Rashmi, is really how would you define the middle market and how do you define that at Citi? And what challenges are you seeing within this group, because it's quite a large group, as they work to decarbonise?
Thank you, Duncan, for the question. Good morning, all. So at Citi, we define mid-market clients as clients that are making annual revenue of between 10 million and $3 billion. And our primary focus is really to lean into our strengths as a truly global bank and industry alignment and expertise to focus on clients that are fast-growing and international-oriented. So think of a digital platform started in Europe that's wanting to be globally present in very quick succession and has growth plans. And Citi Commercial Bank is an integral part of Citi's global strategy. It's a key engine of growth. You saw the video just before that. And And our propositions, for them really cut across all the product suites as well. And then coming to the definition, I see them in two parts. It's a big market. Often our clients, especially as you go towards the developing markets, sit in the value chain of biggest corporations. And they are not maybe the face of the industries, but they're definitely the driving engine of a lot of these industrial companies, consumer companies, and they're sitting in those value chain. And when you talk about emissions, from that perspective, we know the emissions, the scope 3 emissions in the value chains are 11 times more. So really, if you think about decarbonization, there's no real way to decarbonize the global economy without really decarbonization efforts of these mid-market players. And the other part of the definition of the mid-market is it's really is also the hub of innovation. You're seeing a lot of sustainability disruptors coming from this market, and it's across sectors. There isn't one where you're not seeing businesses coming out that are focusing on solving the sustainability challenges. But if you name the few, if you think about the renewable value chain, right? It's not just the solar plant at the end, that everything goes behind it and then after it to actually service the grids and so on. You think about the EV supply chain, value chain, but also a lot of circular economy, no waste business models are driving a lot of innovation in this sector as well. And I think the challenges to your question, right? So the clients that are in the value chain, challenges for them are very much uncertainty around where to start, right? Where to focus and prioritize within the ESG considerations, what steps to take next. And you have to remember they're doing this while grappling with the headwinds of the macroeconomics, right? This higher interest rates, their cost of capital issues, there's supply chain issues, especially in the labor market, with the political instability that also causes issues with the trade corridors. So they're doing this, and they are thinking about how best to manage their stakeholders that are increasingly demanding more disclosures, more reporting around the ESG metrics. So I'd say that's their biggest challenge, where to start. They are, I would say, when I spend more and more time with them across the globe, they're all thinking about it. They're all thinking about the transition and how they can improve their environmental and social practices. But it's not necessarily always comes the top of the priority yet, because they're thinking about all this in the context. And in terms of the sustainability disruptors, their challenges are similar to other fast-growing companies where it's access to capital, competition, resources, growth that they want to find in different markets. And a bank like us, really can help them provide spectrum of solutions. It doesn't need to be labeled sustainability, really, right? It's your liquidity management solutions, your payments, your corridors for trade, working capital improvements. And obviously, if it's focused on sustainability matters, it helps us because we are helping them expand their positive impact across borders by unlocking structured solutions for capital. So that's how I think about it. But long answer, but that's how we think about the market.
No, I think it's what's really what you framed as well is the complexity because of the size and scale, geographical industry. There's so many different factors. So Kelly, thinking how do you at Schneider Electric, how do you navigate some of those challenges, I guess, where there's so many companies at varying stages of that journey. So how do you approach this work?
I think it comes in a lot of different formats, quite frankly. And at Schneider, we're very focused on our own sustainability. And part of being able to talk to clients about how do they actually evolve and decarbonize is being able to do it ourselves. So that was, I would say, sort of step one from the company's perspective. How do we help our top 1,000 suppliers decarbonize, our scope 3 emissions, everything focused on us because we need to then go out and help our clients. From a mid-market perspective, it varies so differently and a little bit different from Rashmi. I would say, sometimes we're dealing with companies, very small SMEs that are 5 employees, all the way up to sort of the broader definition. And their capabilities, their structure, their ability to reference these topics varies vastly. What's exciting about SMEs and the mid-market is they can often move faster than large corporates who are, I would say, under much greater scrutiny from both investors, shareholders, their own employees, quite frankly. And so for us, we're trying to look at where do you even start? This is the big topic. How do you start? How do you get somebody interested? How do you convince them that actually spending a little bit of money to get moving is the place to go? I really always think about it that the less energy used, the better you're off you are. So don't use it in the first place. Not only affects your utility bill, but it also just helps you get moving. So we start with the topic of energy efficiency. Dependent on where in the mid-market a customer falls, there's so many different segments. So mid-market for a building, like we're sitting in today, versus mid-market for a cement plant are going to be very different. And so we try and get pretty clear on what are those kinds of solutions, and really start at this topic of what are those easiest things you can start to address. You have to start the journey, I think.
Yeah. So I mean, in that journey, is that about also getting the right people in the room to have those conversations? Because they could be very different.
Absolutely. And I think both, quite frankly, large corporate customers as well as more of the mid-market, the right people in the room very much varies, depending on a structure, on decision making. Sometimes you might be having the conversation with a plant manager. And that is the decision maker. They understand the business the most. They understand, in fact, where are they using energy? What do they want to do? What equipment's going to fail pretty soon? And in other places, you're speaking to the CFO of a Fortune 500 because that's where the decision making starts. So that's the fun of sales, I think, quite frankly, is also figuring out who is that decision maker. And it's a bit of a balance, I think, between the financials and the environmental and the sort of sustainability corporate good side. And you have to find those people who care about all of it. That's the right decision maker usually.
So, and you've kind of touched a little bit there on collaboration. What does that look like to be a great collaboration partner for your...
Rashmi and I were talking about this a little bit in the green room. So I would say, 10 years ago, the company's approach to collaboration stroke partnership was very different than it is today. And I think that's because the challenges are quite different. The scope of the problem of the world, if you will, around climate change is massive. And so even companies like ours who lead on this front, right? Sustainability is at the core of what we do. Have to partner with everybody because we don't have every solution. I think the other thing that's changing a lot is it's not just technology providers like ourselves. It's banks, it's governments, it's this whole private-public partnership approach. Locally, we're having a lot of conversations with the City of London as an example. How do they intend the next 10 years to decarbonize? What is that going to look like? And that's a public partnership, public-private partnership approach, because I think everybody's recognizing no single place has all the solutions to the topic.
Well, and obviously it's super important because the middle market represents such a huge chunk, if not the majority of the supply chain. So it holds such great importance of everyone getting it right. Is everyone leaning in and collaborating effectively?
I think everyone is a broad description. But certainly I've been at Schneider on and off for almost 20 years in sort of two different stints, and never in my career since sort of this post-COVID have people been so focused on sustainability and decarbonization and climate change. It's clearly the sort of topic of our, I think, broadly our same generation. But I think, their governments have an enormous role to play because what they're doing for the mid-market is also providing support.
Yeah.
So large corporations, the expectation is you should figure out, I think, how to do it yourself. That's you have those resources. Mid-markets and then local governments and how they actually go about implementing and helping people in the mid-market, there's a huge role for governments to play, and we're seeing that more and more, I think, across the world.
For sure. Rashmi, I think another key piece of this is also how you focus on driving both sustainability and returns. And I think you could argue sustainability as well, both environmentally, but also business sustainability, that you need to be evolving because otherwise your options are going to be limited. But how do you think about helping your clients in terms of scaling their sustainability efforts, but also driving business value at the same time? And are there some examples that you can share where that's happened?
Yeah, I mean, as a large global financial institution, our clients, especially at the mid-market, and going to the topic of uncertainty around knowing, they look at us for insights, what's happening around the market, what are their peers doing, what is the sector doing, what is their competition doing, and where do they sit in the whole transition ecosystem, and how can they take benefit of their business models from returns perspective, right? So to bring it to life, think about a client that's thinking about a climate solution project in the US, and there happens to be an IRA there. Could they be thinking about some sort of tax credit reliefs, and they could be thinking about some liquidity events up front that could help them do that. If they're thinking about creating a better framework around their supply chains, could they be thinking about sustainable supply chain financing solutions that bank can help them with, where you can peg the financing and reduce the cost of financing their suppliers linked to the sustainability attributes. So there are solutions that they are seeing from a risk and reward perspective, right? And I think we are marshalling our efforts really, especially in the mid-market, because it's so important to start early in these, to think through how does sustainability initiatives help your top-line revenue growth? How does it help with cost efficiencies, to your point? The plant manager actually knows this is a good thing for me to do. Forget about its sustainability. It's just going to get me better ROI because it's a good CapEx investment. Same thing, how does it create value in the business as a business valuation? Cost of capital is another one. How are investors looking at it as you're thinking about events in the market, both in equity and debt side? So I think there are multiple ways in which we are speaking to them. And I think you touched on this. I think collaboration, the government and the public sector in general, I think have a very critical role to play here when you talk about returns in specific, right? Because let's be honest, we want to drive capital more towards developing markets and where it's needed the most, and where it's mid-market, their credit quality might not be there. And we do have to partner with multilateral banks like Asian Development Bank or DFIs, and we do actively at Citi. And I'll give a couple of examples to just bring it to life. So for example, just a few months ago, we've issued the first plastic bond collaborating with World Bank, in which one of our clients is called Plastic Collective, based out of UK. It's very much an NGO, will be helped expanding their plastic recycling efforts in Indonesia and emerging markets, right? We couldn't do that if World Bank wasn't to upfront offtake that, right? The same thing, if you think about businesses in Korea, I was there last month, where they are trying to expand their supply to the EV, electric vehicle OEMs. And you partner with export agencies like K-Shore to help them get that trade flow working towards in Europe. And the one last one I'd mention is, and again, quite an exciting space, we just did the industry first securitization facility and we secured off-grid solar receivables, and these receivables are in an Africa space for a client called Sun King. So we are not just helping go towards more clean energy, but it's really essential basic services for a very large continent in Africa that enabled this large-scale facility. And we could only do this because we invited DFIs into the facility, and we had this as a syndicated facility who had much more appetite to take that risk in the region and the government. So I think the blended finance piece is quite an important one to keep thinking about. And definitely, I think for the mid-market clients, it has to make sense from a risk and opportunities perspective first. before they start to take any proactive actions around reporting and adopting different metrics and so on.
I think, though, Duncan, the other thing that is enabling a lot of this is data.
Yeah.
So we're at a really different place now than even 5 years ago around the systems in the market, what they can supply. Because if you're a bank, you want to understand your ROI. And obviously, Rashmi is the expert here. But from our side, the system, software orientation of so many products on the market give that data to any customer on the market if it's in their facilities. And so I think that is really helping people to understand, if I do this, it gives me this result and I can show it via data. If I do this, it gives me this result. And that's, I think, also how we're able to help people get started, is that you can see a tangible result. You also mentioned electric vehicles. I think we're seeing enormous growth in both electric vehicles and electric infrastructure. It's one of the easiest things to explain to people around decarbonization. And I use the example a lot because so many people go, I don't even know what you're talking about. Oh, you drive that electric vehicle over there. Okay, let's talk about what that actually really means for the grid. What does it mean for your home? What does it mean for your business? What does it mean every time you drive on the streets of London or New York or wherever? And we have to make those kinds of examples easier, I think, for people to understand, especially in the mid-market, where they don't have a head of sustainability on their staff, and they probably aren't going to. How do we help people understand this is a place to start and move from?
I think it helps as well, and data helps bring everyone together and that understanding. How, just going back and I guess focusing on returns and also accelerating our efforts, how are there any areas of technology that are helping to accelerate performance that you talk about? I mean, obviously you've mentioned EVs as a good example to help people understand, but are there any other things that you're excited about from the technology stance?
I mean, I think the power of software at this point, and quite frankly, when you look at the systems that are on the market, I mean, the app that runs your house all the way up to, things that run a nuclear plant. And the innovation and the pace and the speed at which those sorts of things are changing, I think is really driving and accelerating us forward in a way I certainly haven't seen. And I think that in some ways makes things pretty accessible. Schneider's bread and butter is a electrical infrastructure, electrical breaker, right? Nobody, I have to explain to my parents what that is, right? So people, if you're not in our world, that's not really what you're talking about, but you absolutely understand, I have this app and it shows me that I used less electricity last month, or certainly some of the large utilities and retailers are doing very interesting stuff to drive local engagement with their customers. So I think the technology is just, and the software orientation of that is really enabling us to think in a different way.
I mean, technology is definitely an enabler across the sectors, really, to decarbonize, right? I mean, I'll give some examples. Data. I mean, think about the amount of technology companies out there helping carbon footprinting, carbon accounting, carbon data, mapping to your point to be able to see what you're doing. But also some really unique business models. I have some clients that are thinking about putting a lot of the supply chain data that you have on blockchains. So that just creates an open API, so you have transparency of what's happening the first mile, really, at the small farmer holders level. But I think the technology as the base to enable a lot of the solutions that are out there, even circular economy. We have clients that are thinking about circulating luxury brands or clothes or textile or even paper or electronics. How do you enable that? These are technical tech companies, digital platforms that are really making that happen. So I think I see technology as like enablement for a lot of these business models that are focusing on sustainability initiatives.
So I think in our last couple of minutes, and as we're all very focused on progress, I just wanted to ask you both, to close this off, how do you both measure success and progress at your companies, and what's the most important KPI or data point that you look at? And I'm sure there are multiple, but is there one that you hold closer to you to help kind of chart
I mean, we, and it's public, we measure our sustainability index. I actually think my personal opinion on this is that one of the biggest things that has driven and changed us as a company is that pretty much every employee, part of their compensation is tied to our sustainability index. And that includes much broader than the word sustainability. It's our gender and diversity index, and it's a conglomeration of a bunch of things. But to me, when employees have a real personal component of their pay, it definitely helps drive, I think, the company culture and where people focus and drive. And certainly for us, that's meant business results that have followed on from that very positively.
Yeah. So, I mean, look, at Citi, we have all sorts of metrics. We have our net zero target, we have our $1 trillion sustainable finance goals. But taking it to a business, which is where I run my team, I think about it as objectives. What are our objectives in the business when you think about sustainability? And they're twofold. The first one, we want to be trusted transition partners to all of these value chain mid-market players, help them facilitate, finance their transition activity, bring them the best insights and the market knowledge. And then the other one is, really help support, grow this sustainability disruptor piece, which is a growing part of our portfolio, and help them scale their own positive impact across the borders and unlock that through structured capital solutions, as I gave some examples on. And in terms of the metrics, right, so it's volume of financing that we are doing, the amount of sustainability disruptors we have across sectors, what type of transaction are we able to lead with them. And then just two other things I want to mention, and you touched on, is, there's no one institution that can accelerate this, right? So the idea of us collaborating and partnering across our ecosystems, be it public sectors, everybody in the firm, not just me, is thinking about how do we speak to our multilateral banks? What do we do with the governments? What do we do with the agencies? What do we do policymakers? So I think we do need that ecosystem, and we continuously drive that as a metric as well. And the last one, which again, all of our employees, to your point, we need to get them along on this journey with us and make sure they are adopting that sustainability mindset as well.
Thank you. I think that brings us pretty much to time. Thank you so much for joining us, Kelly and Rashmi. I think it's been a really, really great conversation and highlights the importance of the middle market. And so thank you also for all of your work in that area.
Thank you.
Thank you.
Thank you.
Let's hear it for the people who take ambition and turn it into action. The individuals, the organizations who impact our daily lives, bridging progress and sustainability for all. Through automation, electrification, and digitization. Let's hear it for the impact makers.
Please welcome to the stage Natasha Boulding, CEO of Low Carbon Materials.
Good morning, everyone. It's an absolute pleasure to be here and speak to you all. So I am Natasha, Chief Exec and co-founder of a startup, Low Carbon Materials. And Low Carbon Materials is a climate tech startup focusing on combating climate change, specifically through material innovation. So we concentrate on the challenges associated with materials, such as the emissions associated with individual materials, but also the lack of circularity that we currently find with the materials we use. And thank you, Meg, for the introduction and making sure that you mentioned that we're in one of the most sustainable buildings in London, because it's amazing to be able to speak to you in such an incredible building. So we started our journey in the built environment, and that's for good reason, because buildings mean a lot to people, whether it's the homes you live in, whether it's the offices that you work in. But not many people think about the impact that these types of materials and buildings have on the planet. So our startup story is quite pragmatic, And myself and my two co-founders are material scientists, or I should probably say were, all those years ago, 4 years ago. And as scientists, and as you would probably expect, we went straight to the data to try and understand how we could make our mark and positively impact the planet. So we did an online search, and we searched what is the biggest threat facing humanity. And 4 years ago, climate change, climate change, climate change. So being the pragmatic scientists we were, well, clearly that's where we want to be, and that's what we want to start to solve. And we dug into that a little bit deeper as materials scientists. What materials are contributing to climate change? And concrete came up. So that's where we started. As you can see from the pictures, I've included a road. We are also excited to announce that we're in the asphalt market as well now. So a really tiny team, a climate tech startup tackling some of the world's biggest challenges. So specifically, why concrete and asphalt? As I mentioned, they are significant contributors of greenhouse gas emissions. So concrete alone is responsible for about 8% of global CO2 emissions, and they are everywhere. The reliance that we have on concrete and asphalt for our roads, strategic road networks, whether you cycle, drive, is huge. But they're going nowhere, and they are absolutely essential building materials. That's why innovation is absolutely key in this sector. Gone are the days where we can just build and have processes that we've always had. We really need to rethink the way that we use materials. So this is a hierarchy of reducing carbon emissions within the built environment. So firstly, do we need to build at all? Build nothing is always, when you're thinking about carbon, the best option. If you conclude, yes, we absolutely do need to build, then can we build less? After build less, can we build clever, build efficiently, and reduce waste? So there's lots of materials during the building process that get thrown away and are deemed valueless that actually are not valueless. So can we change processes around waste? So the work that we do sits in the build clever and build more efficiently categories. So we have two innovations at the moment, and our journey started with Osto and concrete. So Osto is a carbon negative aggregate, so it's essentially a gravel-like material that can be used in concrete as traditional aggregates are used in concrete. And we have recently announced Akla, which is a similar gravel-like material, but has been developed to decarbonize asphalt, which is the material that makes up our road systems. And we just finished a really, really exciting project in County Durham, which is a net zero asphalt layer on one of the major roads that run through the city. And we worked really closely with Durham County Council as the client to help them meet some of their carbon targets. And on the back of this project, we're being contacted by other local authorities to talk about ways that perhaps they could work with us and startups in general to try and reach their carbon targets and reduce their emissions. So Akla is carbon negative. It's a drop-in solution. You need quite low volumes in a traditional mix to make it net zero. It's a stackable carbon benefit. It was very important to us that we could go alongside other innovations, not just people use the aggregate and that's it, job done. And in fact, in the project on the previous slide, it was exciting because we used every single innovation in asphalt that we possibly can, from really pushing the amount of other waste road in the new road, and using lots of other waste products as well. There's a high application potential with a material like this.
And the benefit is you can really tackle the problem at its core rather than look to buy offsets after the project is completed. And with everything we do as a startup, especially in the built environment, we know that we can't reinvent the wheel. We know that it's a traditional industry, and we know that we need quick change. So the drop-in part of the solution is really important in such a traditional industry. So we reduce carbon emissions two main ways. Firstly, through permanent carbon removal. So we use carbon sequestration, which is the capture and permanent storage of CO2. And we are increasing this more and more as part of one of our R&D programs. And we also have some avoidance. So some of the materials that we use are waste materials that would otherwise be incinerated or burned. So they're deemed valueless currently. Although burning our waste generates some energy, on the whole, it's quite a bad process and releases vast amounts of CO2 emissions. So we completely avoid this. And we are really proud to be supported by lots of organizations. And I would specifically like to call out the Earthshot Prize, which is one of the most prestigious environmental awards on the planet, founded by His Royal Highness Prince William. And it's an honor to be amongst the most urgent, optimistic change makers on the planet. And now we have the pleasure to continue that journey with the Earthshot Prize. It's opened probably more doors for us than we could ever imagined as a startup. So we have many things. We have a market-ready decarbonization solution. We have relationships with the supply chain. We have state-of-the-art facilities. But in construction and the built environment, everyone rushes to be second. So we want to work with pioneers and change makers, whether that's people who have projects, whether that's people that want to push the dial and be the first movers on materials like this. So we're looking for project partners and scale-up partners. And this is not just something that's isolated to us as a startup. I speak on behalf of all startups here, where we all have a responsibility to support companies, smaller companies, really pushing the boundaries of innovation. And Osto and ACLA for LCM is just the start. We will go back to the drawing board time and time again to really understand where we can innovate next. If you can touch it, that's what we do. And if it reduces carbon emissions from incumbent processes or materials, that's what we do. So the ultimate goal for us is to be a world leader in low carbon and environmentally friendly materials. Thank you.
Please welcome to the stage Anna Selina Haberbosch, co-founder and co-CEO of SeedTrace, and Ornian Schreiber, co-founder and CEO of COA, for a conversation with Bloomberg's Malika Kapoor.
Great to have you with us. And we'll get started in a second. Just a reminder to please send in your questions. We'd love to hear from you, and send in your questions. We'll try our best to get to as many of them as we can. So we're here to talk about supply chain transparency. And you both have the same goal. You want to increase transparency along supply chains. Your company, SeedTrace, Anna, provides a platform that helps make this possible, and your company, Anyan, you use Anna's platform to increase transparency. Anna, let me begin with you. By launching SeedTrace, what were you trying to solve for?
Yeah, thank you. Well, with SeedTrace, we try to rethink traceability and transparency from a sustainability angle. So until now, I think we've been asking ourselves, when we talk about traceability, when was the product where, right? That was the question we were asking. Where does it come from? When was it where? And I think it's time to ask, what's the impact along the supply chain as well and ingrain that into the way we think about it. And that's what we try to do. So we focus very much on collecting, assessing, and then also sharing relevant social and environmental data along the supply chain. And I think transparency kind of is just the backbone of any conscious decisions that we have to make for the environment and for the people. And I think we think of transparency a lot towards consumers, but we need transparency between businesses. We need it along the supply chain so that we can make conscious choices, both towards B2B partners in our operations and as consumers. And we are trying to enable that with our platform and the way we work.
And then you work with cocoa farmers in West Africa, which is where 80% of the world's cocoa production happens. Why did you decide to use SeedTrace?
Yeah, so maybe let me first explain a little bit what we do. So we work in cocoa, that's true. We have 2 factories in Ghana, and the second largest producer of cocoa in the world. And if you look at the cocoa fruit itself, actually the cocoa beans, what we saw here or see here, the commodity prices of this are actually the kernels of a fruit, which is 75% bigger. So right today, only 25% of the entire fruit are utilized. And we have developed a process how the cocoa pulp around these cocoa beans, which actually are kernels of a fruit, are utilized, so similar like you would use orange juice around the orange kernels. And that's what we turn into juice, concentrate and powder, and sell as B2B player into the ingredient industry. And with this, we can reduce food waste, and we can increase the income of the smallholder farmers, which we work with by 30%, by not fighting over the cake of this expensive cake now, but making it bigger so that everybody can benefit. And why are we working with SeedTrace is we have this new ingredient, right? We have a fascinating ingredient that has so much positive impact. And what we believe as an ingredient provider, we not only have to provide a great, tasty ingredient. Unfortunately, we don't have it here because it didn't come in time, but
I know, we were trying to get the juices for you all to try.
So that's always the best about a product, to try it. But next to taste, it has to be a great story that consumers excite and where consumers as well want and are able to trust a brand. And that's exactly where SeedTrace is offering the perfect solution, because with SeedTrace, we can show exactly where the product is coming from, which impact was made for which farmer, 100% transparent, 100% visible for the consumers through a QR code. I think we're going to see this later in live, because that's how you can experience best. But that's why we choose to work with SeedTrace. And SeedTrace for us in this case is a value proposition as part of the business, right? The one value proposition is the taste. The other value proposition is a great story and doing this transparent and trustworthy. And that's where SeedTrace offers a perfect solution.
So I think let's bring up the QR code, and I think that will help you understand how exactly it works. So if you all, point your phones towards that. And meantime, while they're getting that up, Anna, can you explain how this works and what they're going to see, that the payments to farmers are reflected on this app, right?
Mm-hmm. Yeah, exactly. So I think it's really nice that we can bring this sort of tangible example together here to the stage. And specifically how we tackle the challenges here is that with SeedTrace, we verify the direct payments that KOA makes to smallholder farmers. So we trace them. If we look at the data credibility, which is a really, really big aspect for us, of course. First of all, we can look at the traceability. So who do we collect the information from? In what moment? Do we collect it in the moment that it is actually paid, or half a year later in an Excel sheet? So of course, that's already an aspect. The way we store it securely is an aspect. But the great thing in this project is that we do not only trace it and analyze and make it transparent, but we actually verify it. And how do we do that? Is because KOA pays not in cash, but with mobile payments. And that allows us to actually verify through an API that we have with Africa's biggest telecommunications provider, MTN, that the money really arrived with the right person in the claimed amount. Now,
so the moment a payment is made is reflected here, and it's automatic because it's a mobile payment. So there's nobody entering any data to say this payment was made on a particular date and a particular time. So there's no room for human error or anything.
Yeah. So basically, we have an API in KOA's ERP system. So the moment that they trigger the payment, we receive a claim saying, hey, we have paid this amount to that person for that and that. We say, great, we have it in the right moment from the right source. But anyone could claim that in their own ERP system, right? So then in addition, we have the layer of verification through the payment provider. And I think another aspect that Anjan already highlighted in the beginning is that we do that, but what we also do is give this information and verified data to the customers of Coa, so the B2B partners, the producers, like you can see here from Fast or Sprüngli, who actually can then use that data again for CSR purposes, to actually understand their own impact through the purchase that they made, and also use it if they want to in communications and enrich the information.
Are cocoa farmers earning more as a result of this?
So the cocoa farmers are earning more because we have this cake which we make larger, right? So like that's, I think, is always a perfect example. Instead of fighting over the cake of the cocoa beans, we make the cake larger and create a win-win-win situation through our business model, right? And so that's where the farmer earns more, definitely already on this. However, as well, like how can they earn more through seed traces? They don't earn directly more through seed trace, but through us selling the product and through not only providing an ingredient, but also a value proposition that in the end the consumer excites and that the consumer motivates to buy a purchase and be trustworthy towards a brand or from a brand towards the consumer. That is then creating this extra impact. So I think on the one hand, yes, through our activities, but on the other hand, indirectly through the work Seed Race is doing, it's enhancing brand loyalty and thus purchase decisions.
So you're solving for payments and increasing transparency around payments, but the cocoa industry has been rocked by several scandals over the last couple of years. Deforestation is one of them. The use of child labor is something that keeps coming up when we talk about the cocoa industry. Is there a world in which Seed Trace could help increase transparency around the issues of deforestation and the use of child labor?
Yeah, so I think maybe the first thing that's important to highlight is that we would never claim that we can solve it all by ourselves. So that for sure. There are many things we cannot replace, right? So for instance, people and audits on the ground, we cannot replace that as a technical solution. But of course, what we do factors into these aspects. So for instance, a lot of the big cocoa companies or chocolate producers, they have programs in place to secure living incomes, which is very closely related to the topic of child labor, because you need to make sure that families earn enough money so that they can live from it, so that the children do not have to go to work. So what we do with some of our customers is that we track the KPIs to measure wherever people can live from the money that they earn. So that obviously factors into the child labor aspect, as many others. And it's a very complex field, because if you want to calculate a living income of a person, it's not enough to know how much they earn and put it next to a global benchmark that is maybe 2-3 years old. You actually need to collect a lot of additional information, right? About the household, about other incomes that they have, about the costs that they have. So that's one aspect. And with regard to the second one that you highlighted with deforestation, of course, because we focus on the first mile data collection and on primary data collection. And actually knowing where the products come from, collecting the polygons of the farms, the geodata is part of what we do in the first mile collection. And that then allows companies to do the deforestation risk analysis. But again, we are not a geospatial focused company. We would partner with other organizations that focus on the satellite imagery to make the risk analysis. We feed them with the primary data, and then we give our customers the risk analysis.
I want to bring up Unilever. Now, as many of you in this audience would know, that Unilever, which for a very long time has been the poster child for sustainability and ESG issues, recently announced that they're going to roll back some of their sustainability targets. This is not a good message for people like you. How worried are you about how this is going to impact people and companies that are committed to sustainability?
So I think if we look at the last 4 years, if I look into my entrepreneurial journey, I think there were a lot of headwinds coming, and so much roller coaster going up and down. And of course, there's a lot of worries right now, like what do I, where do I prioritize my business activities? But do we have to focus in long term on being sustainable? Or I actually don't like the word sustainable too much. I like more the word responsible, right? And do we treat sustainability, responsibility as a separate part of the business or as core of our business? I think that's the challenge here, right? Because what Unilever did, they really made like this, really step back from the whole approach. And I can understand it to some extent, because if you want to do business the right way, it's not easy, right? It requires stamina. You have to continue doing it. However, what is the option, right? So, and I think one of the big problems for Unilever is that they treat responsibility in business as a either or. You can be profitable or you can be sustainable. And I think that's one of the biggest problems and the biggest mistakes we have in management, that we say, oh, my business has to be profitable, so I cannot do sustainability. No, it has to be the core of the business model, right? And that's maybe giving you 2 examples of my personal career, which I went through the last 12, 15 years, is I worked in solar energy already 14 years ago. And back then I tried to work with the large energy producers in Germany, like RWE and E.ON and so on, right? And when I went there trying to look for projects together, they laughed at me. They said, coal energy is the best thing we can have. It's so cheap, it's so affordable. Why should I do renewable energies? Well, 5 years later, they were bankrupt, right? So the question is not, do you do either or how do I integrate in my business early enough? And that was energy, right? Energy is very prominent in terms of CO2 and sustainability, but that's in the field of all of our activities. And I think therefore the biggest pledge, whoever you talk to in business, is not ask, is it either or, but to say, how can we make it and how can we bring sustainability in the core of the business model and the CEO attention, right? And the other example now, what we had at the screen was chocolate and was cocoa. For 40 years, there was an unsustainable business model for the farmer. The farmer just didn't earn enough money. Most of them live well below the poverty line. And so, of course, at one point, they don't continue being business anymore because you would not run business if you're not profitable as well, right? And so they cut down the cocoa trees. And they made galamse, illegal gold mining in Ghana it's called. And all of a sudden, the chocolate prices or the cocoa prices go skyrocket. I was just last week or this week at the World Cocoa Conference in Brussels. And there is no discussion that a lot of the players will not survive this cocoa price hike because it's just too much. So the business model for cocoa, for chocolate, is not working anymore. And so bring this back to the Unilever case. If we, maybe in the short term, right, if we want to just pull out profits as much as possible, yeah, get rid of ESG and get rid of sustainability and don't take it the core of your business model. But if you want to be in for longevity of your business, if you think about returns in the next 20, 30 years, there's no question that we have to do that, right? And that's, I think, the big pledge to this.
But at the same time, I mean, still, it does send a message when a company like Unilever rolls back on its sustainability targets. And I wonder, particularly for C-Trace, is it going to make harder to get funding and support?
Mm-hmm. Yeah, I think we were talking about this also yesterday. And I think one of the challenges that are maybe interestingly reflected in Unilever making this choice, we also have it. And that is that the question where the pressure for more sustainability or more socially and environmentally conscious choices comes from is shifting, right? 2 years ago, 3 years ago, we were talking a lot about the consumer pressure. So if you don't build that transparency, if you don't, communicate B2C about your sustainability ambitions, then you're going to lose market share. And now I think the conversation is turning more and more towards regulations from the EU, what is happening there. So I can also imagine that, I'm just speculating here, but that the choices Unilever made is also because of that. Maybe because of the Green Claim Directive, because now the claims that you make towards consumers have to be evidence-backed. And if they are not, and if you're making false claims, you have high fines that you might be facing and high reputational risk, higher than it was before. And I think something we're seeing that is shifting is, we always see this when we actually start projects with companies, we have different departments going against each other.
Butting heads.
So like sustainability doesn't necessarily like marketing, because marketing has been claiming things for many years that aren't really true, but now nobody invests because, well, it worked. And I think this is something we're seeing. And honestly, for C-Trace, it also means that we need to prove that we are flexible and dynamic enough to make sure that we don't lose our vision and our strategy in building these long-term strategies, because without transparency in the supply chain, we always say it's a little bit like sailing without a compass. Because you have new regulations coming in, new checkboxes that you have to check, but if you don't have a long-term strategy, that's going to cost you a lot of resources over and over again. Well, we have to do that as well.
And I'm so glad that we have gotten questions in from the audience, so let's get to some of them. Meg?
How do you ensure that companies adhere to your guidelines and T&Cs?
Yeah, I guess that's towards me. Yeah, so of course, the way that we work on data credibility, assuring that it's true, is a complex framework. Some of the things we can check them and verify them, as we do with the payments for COA, because there's an independent third party that we can involve and integrate, but that's not always the case. So that's why we have an impact framework. We also integrate certification, audits, different social and environmental claims that are clustered there alongside the SDGs, where we can request different documentation or a thumb up of a relevant third party. So as I said before, we do not try to replace people on the ground or audits. And sometimes we talk about confirmed claims. That would be whenever it's back through documentation, confirmations from the relevant parties, or verified when there is an independent third party. So I think transparency for us is also important in being open about that framework and making sure everyone who uses it understands their criteria.
I think we have time for one more.
Have you tried partnering with fair trade? Is there overlap?
Again, for me? Yeah, I mean, that's a bigger subject, is sort of facilitating the certifications as well, because the way that they currently work is companies usually maybe once per year fill out some Excel sheets and maybe even some PDFs. But all of this data is sort of only used for the certification and not used by the subsequent actors in the supply chain or to actually understand the impact on a day-to-day. So what we do is that if an organization is fair trade certified, of course, a lot of data is already there that we can use and that we use through upload functions and assessment. And we try to put it into the day-to-day, but we don't directly collaborate with fair trade.
I think if we can squeeze in just one more, there's a great question about cocoa prices.
Yes.
Should we? And we have a chart which shows that, and I think if Anyan could get to that. Do you have that?
Yeah, absolutely. And you kind of touched on it a little bit, but the question was how, with the price of cocoa being so high, why are the farmers' incomes still so low? So how do you address the pricing, the income for farmers?
Yes, I think it's a very complex topic, let's say that way. And I try to put it quite easy, right? It's simply bargaining power. You have an average size of a cocoa farmer we work with in West Africa, where most cocoa is coming from, is 2.5 hectares, right? And they live well below the poverty line, so they cannot hold back their commodity or something, right? So like they are just on the mercy of whoever is buying. And so you have 4.5 million of the smallholder farmers. Above this, you have 2 governments that are involved as well in the sector in regulation that should do something for the farmers, which they partially as well do, but as well they have other challenges in developing countries. And then you have got 3 traders, 3 of the bigger traders, and around 10 processors in the end that make 95% of the global market, right? And if you then ask the market or the players, so why do you not just increase the income for the farmers? They say, yeah, the market doesn't allow it. Well, the market is 15 people. You can put them around the table, let them talk with each other, and I'm sure they find a sensible solution. But I think the pure answer for it is just simply disparity between the world market price and the price that the farmer reaches at the farm gate, which is now a spread of, I think the farm gate price per ton is around 2,000, and 9,000 tons is earned in between. $9,000 per ton is earned in between. And so yes, sure, it's poor ESG of the players in between.
Thank you so much for your questions, and Anyan, thank you for being with us today. And I just want to remind you all that equality is a key pillar of the Bloomberg newsroom, so please go to bloomberg.com/equality, and you can check out some more of our stories around issues like supply chain transparency. Thank you very much.
Thank you.
Thank you.
Please welcome to the stage Daniel Hanna, Global Head of Sustainable Finance at Barclays, for a conversation with Bloomberg's Kriti Gupta.
Thank you so much for joining me. Folks, we've got Daniel Hanna here, the global, just as head of sustainable finance, I guess you're global head of sustainable finance. You can call me whatever you like. Over at Barclays. We thank you so much. I'm going to get right into it because I feel like 20 minutes is a lot of time, and then you get into it and it'll go by in an absolute blink. So from your vantage point, There's a lot of misconceptions about green, ESG, how you invest in it. What's the biggest misconception that people usually have?
I think that's a great question.
Thank you, I try.
Oh, yeah, no. I think the biggest misconception. So I think one of the big challenges for sustainable finance as a whole is, and this isn't actually a misconception, I think this is a reality, is that we've kind of got lost in our own alphabet soup of acronyms, taxonomies, frameworks. And I mean, for those of you in the audience and listening in, you know, they're in this space, you know, you're probably a master of all these different types of transactions and ways of typographies. So I think one of the big misconceptions is that we can sort of somehow channel this capital in a way that sidesteps those issues. Like I do think it has a very key role to play. And to do that, we need to give investors confidence and we need to give regulators confidence that when we say something is green, it is green. And unless you're being very transparent and set that taxonomy, it's very hard to do that. I think a misconception on the other side, though, is, and I say that as I think a criticism of the industry I'm in, is that also that's it. Like, we actually do also need to think about not just how you drive, if you like, a reduction in the emissions that is in that ring fence, but actually how are you driving real world decarbonization? And I think one of the big areas where I see that as being a particular challenge is in emerging markets, where I think a lot of these taxonomies have been defined with a sort of developed world perspective. And the unfortunate unintended consequence of that is that in some ways it makes it even harder for emerging markets where they have the biggest sort of risk from climate change and the biggest vulnerabilities and also the biggest opportunities to leapfrog. So I think that's kind of one misconception. The other one I think is that this is a sort of, from a financial sector's perspective, this is an area that requires a reduction in sort of revenues. And effectively this is all about subsidizing in some form or another. And actually, I think where you can really see a transition coming through, and as you scale this up, I think you can build sustainable business models, whether it's in the real world economy around technologies, companies, the transition of these companies, or in the financial industry around how you move this capital to work to drive decarbonization and more sort of social purpose.
You use the word subsidizing, and I'll bring up another S word here, which is sustainable. It's in your title. One of the issues with subsidizing, and I'm thinking of farming as an easy example of how this works globally, is that it's not seen as sustainable, especially when you're talking about growing debt levels around the world. How do you square the two, the sustainability with the subsidization?
Well, I think that's exactly right. And I think I think that to catalyze new things, you often need, particularly in the time frame that we're trying to catalyze it, you may need a pump priming of some sorts and that subsidy. But once you get to scale, you should be able to move beyond that subsidy to really move into the global space. And if you look at, if you look at sort of in the private fund space, you're now seeing, people like Brookfield and others raise tens of billions of dollars of capital to deploy into transition and decarbonization. They're not doing that because they don't think that's a good idea. They're doing that because they see a significant business opportunity. I mean, what we're trying to do in this rewiring of the global economy is move an industrial revolution at sort of extraordinary speed. And to get to the sort of levels of emissions reductions that we need to see in this decade and in the next decade, you do need to find ways to accelerate the spread of technology that would probably take a lot longer otherwise. And that's where the subsidy comes really critical. But both the private sector and the public sector have limited capital. So I think we need to be really thoughtful about how do we employ just enough capital or subsidy, to use your words, to catalyze, but not enough that you create an unsustainable business model where you just are not able to bring in other capital. And I'll give you an example from my past, and I think we were just talking about cocoa farmers and others. I mean, I looked at off-grid solar in Africa and the financing of that a long time ago. And one of the big challenges for a bank to look at that, and we were very focused on trying to do that, was that the way that they were financed at the time was all development money. And it was all grant money. And so they had no credit history. They had no ability for a bank to go in and say, okay, well, I can see what is becoming bankable. And that wasn't a sustainable business model. Now you're seeing some of those companies consolidate, get to a size where you are able to put global capital to work. So I think this sort of balance between what is catalytic versus what is subsidies goes to heart a lot of the challenges.
What about the affordability piece of it? It feels like we're talking about this green transition, and to get to the point of the scale that you're talking about, you have to put in that money to begin with. And yes, a lot of it's being government funded at the moment. But a lot of people are looking at the green transition, whether it's, I'm going to go as simple as EVs or sustainable finance or whatever, insert your green activity here, and saying that's a really expensive thing to be doing. You've already seen certain governments, the UK government included, pulling back on some of that because it's so expensive. How do you make sustainability affordable?
So I think this is one of the great challenges that we are also facing at the moment around how do you make this shift so clean, how do you also make it affordable, how do you make it just and equitable at the same time? And so we are balancing these different things. But look at the success of things like solar and coming down the costs over the last sort of 10, 20 years. You know, you've seen sort of 90% reduction in the cost of solar panels, to the point now when there was a story in a competing news agency about, you know, solar panels being used effectively for fences because they are so, it was so affordable. And I think it's just a really powerful example of when you get to scale, when you get to that level, you can make it affordable.
Yeah.
And I sort of think that can be deployed in lots of different technologies as well. What we're all trying to work out is exactly when is that tipping point that something gets to that scale, affordability, and really then gets an ability to go at a much, much bigger scale. And I think one of the biggest challenges that we see that we're really trying to tackle is, as you think about those technologies, that needs capital.
Yeah.
And at the moment, I think there is actually quite a lot of very early stage venture capital focused on climate tech. So last year, you know, venture capital had a terrible year. You saw a reduction globally in all types of venture capital, but climate tech actually grew. In this country, it grew to 11% market share. And if you look at the sort of large-scale infrastructure space, you know, you are now seeing, you know, the amount of dry powder that's being held by those funds to scale things is there. The challenge is this bit in the middle, which is this point around at what point does the technology get to scalability, commerciality? And there's a missing middle of capital between the venture and the infra, where something is too developed, needs too much money for venture, but is too nascent, too early for the infrastructure. And I think that's where more focus is needed from banks like us, insurers, public capital, government money to tackle this. And I'll give you a good example. We were just co-led a round into Geopora, which is actually the UK's largest green hydrogen producer at the moment, working with the UK Infrastructure Bank. And then that combination of us as coming in as a private investor, speaking to other investors, there were other investors like Sven coming in, and then the sort of involvement of the UK Infrastructure Bank, we need to see that model replicated at a much bigger scale.
So I'm trying to get clarification here on the time horizon to do all of this. You've given examples that are 10, 20 years. Are you, as kind of plugging that middle market hole, basically, looking at it from a multi-decade perspective, or is this something that's actionable within the next 10 years?
Well, I think it's got to be actionable because we need to see a significant reduction in emissions, a 40% reduction in emissions in this decade. So to avoid the impacts of climate change, there is an urgency to this. I mean, that's why we've set a target for 2030 of mobilizing $1 trillion of sustainable and transition finance in this decade.
Yeah.
Equally, why we have set financed emissions targets, i.e. the amount that the impact our financing has into emitting sectors, the hard to abate sectors, as well, of 2025 and 2030. And so in energy, for example, we've already seen a 44% reduction since 2020 in the amount of financed emissions, the emissions impact of our lending into the energy sector. That was our 2030 target. We're already there at 23, 24. And so we're very focused on this. And I think there is, we've seen how this can get scaled. 5 years ago, EV cars, I mean, obviously a lot of focus on EV cars, the slowdown in growth. But let's recognize 5 years ago, it was 1 in 70 new cars were EVs. We're sort of globally at 1 in 3, 1 in 4. So we've seen a significant shift. So yes, it's going to go up and down, but that trend we see there and it needs to get accelerated.
Where's the appetite going to come from in the next 5 years in the context of, by the way, the possibility that in the next 12 months, the Biden administration in the US and arguably some of the drivers even here in Europe aren't going to be as momentum driven around the green transition. I'm curious about where the appetite comes from. Who makes up the gap?
Well, so I think, when we speak to our clients in climate tech and in the energy transition, I think stability is really important. So having clarity around sort of the regulatory environment that you operate in does have an impact. And as that changes, that does have an impact and will be a headwind. But at the same time, decarbonization offers, in many cases, efficiency savings. So we did a survey of small companies, medium-sized companies in the UK. 90% said reducing emissions they just thought was good business. And I think in many spaces you're seeing, even in the oil and gas, the focus around decarbonization of the reduction of their scope 1 and 2 emissions. So I don't see that trend changing significantly. Then the key bit is just these new technologies, how quickly will they get adopted in different spaces? And so, in carbon capture, we've seen the investment levels double last year. We've seen a lot of interest in carbon direct removals that wasn't there a couple of years ago. Hydrogen, we raised $250 million for Omnium, a green hydrogen company in the US. That was our 5th deal in 13 months in this space.
Yeah.
So I think you're seeing that activity. As you say, it's quite hard to predict how much it will wax and wane over the next 24 months.
So outside of perhaps checking the boxes that you need to from a regulatory standpoint, a carbon credit standpoint, et cetera, and hitting those climate goals, is there money in this? Is this a profitable venture?
Yeah, I think so, absolutely. Yeah.
And your clients agree?
Well, I think, you can see the value that can get created by, again, obviously Tesla, the share price has come down, but there's a huge amount of value is being created along the way. We're seeing...
and erased. And erased along the way.
No, sure. But I think if you came very early at that stage, you'd still be quite happy where you are, even after that rebound. So value does get created through this innovation, through this change. Valuations will go up and down in a period of time. But I think there's very much in the real economy and in the sort of investment space, in the banking space, 100%. We're seeing, $1 trillion plus got invested last year in the energy transition, exceeded fossil fuel investment for the first time. $4 trillion is needed to get to us an IEA net zero pathway. That is a lot of capital that needs to be deployed into a lot of different companies.
But it feels like that return on investment is still what a lot of people on the sidelines need to see to really get behind this. And then you already have kind of early movers like Barclays doing that. I'm curious when that moment will come, and I'm really simplifying this here, but that moment will come where people are saying, okay, well, some sort of green-related project is going to be more profitable from a money bottom line perspective than drilling in oil in, the panhandle of Texas, for example.
Well, I think, as I mentioned earlier, I think you're already seeing the money move, right? So the amount of investment in energy transition is exceeding oil and gas. So money's already moving, as you've kind of correctly challenged. And then if you think through some of the changes that we're likely to see, and I do agree, I think more to get to the level of capital we do need to do more. And so the introduction of, for example, the carbon border mechanism by the Europeans around effectively putting a carbon price around imports, the use of carbon prices more broadly, I think we're going to see that grow. The Inflation Reduction Act, that's obviously been a huge catalyst as well. That's created huge number of projects in the US. And so I think policy, capital, I do see this still coming together. And I think, yes, there are headwinds. There are always going to be headwinds. But there are opportunities here, I think, particularly at this level.
What do you need to see out of, I'm going to put the US on pause for a second, given the election risk dynamic there. What do you need to see in Europe? What do you need to see in Asia to see the momentum kind of get another boost?
Well, I think one of the really interesting things over the last 3 years actually is Asia. We've seen a really significant uptick. And the number of companies in Asia that are setting science-based emission reduction targets, the growth that we've seen in AUM in ESG funds in Asia, the growth that we've seen in sustainable bonds in Asia. So actually, I think Asia, there is this big upswing. India saw one of the biggest global increases in climate tech investment last year. China obviously has really gone after this. So I think Asia, there is this big focus. In Europe, last year we saw growth again across the board in this space. I think the EU New Green Deal, I think that will change things. And then I think this point around carbon pricing, I think companies, what is covered within the EU ETS scheme, so the carbon pricing scheme there, and CABM, that is driving a number of companies to look at this. Look, and it's worth saying that the biggest green financings that happened were around H2 Green Steel, Northvolt, all European companies, all thinking about the opportunity of clean power and how to put that into batteries, steel, these hard-to-abate sectors.
Very quickly, there's also a question of if there is all this momentum, is the industry going to be able to catch up and meet that demand?
So, I mean, which industry now? Is the finance industry, the real economy industry?
I feel like that's the conversation across everything.
Look, I think you've put your finger on one of the biggest challenges that we face, which is actually just coordination. And I think if you take, say, hydrogen, one of the things that's actually holding up hydrogen in certain sectors is the consumers of hydrogen need to invest to be able to take hydrogen. So whether it's steel companies or others. The producers of green hydrogen need to put projects into the ground to produce it. And both consumer and producer are sort of waiting for the other to get to your challenge. Okay, when is it going to be scalable? When is it really worth it? And so I think this coordination issue is actually the biggest thing that we have to tackle. And that's why I think these sort of new ways of financing where effectively suppliers and consumers in the sort of real economy are coming together to put money into a project to try and tackle that kind of coordination across the value chain. That is a model I think we will see scaled again and again over the next couple of years.
You should put them on an IB chat. I'm sure it'll be a lot easier. Daniel Hanna, we have to leave it there, but thank you so much for joining us. That took you 20 minutes go by fast.
Thank you.
Please welcome to the stage Mikhail Bulo-Linsby, co-founder and chairman at Urban Partners, and Elizabeth Gonzalez, senior manager, thought leadership and community engagement at Bloomberg Live Experiences.
Okay, let's do a little bit of time traveling. Back to 2020, a little scary. Can I see a show of hands, how many people in this room had to flee the city they lived in during the pandemic? Few of us. I certainly did. And I remember for a moment thinking, are cities dead? But of course they're not, and they never will be. Because in 25 years, 7 billion people will be living in cities. That's 7 out of every 10 people on the planet. And we can't keep doing more of the same. We would have to build 1 New York City every month between now and 2050. But we can't keep building one lonesome, carbon-spewing skyscraper at a time. Which is why the Bloomberg New Economy Dynamic Cities Coalition is on a mission with our co-chair, Urban Partners, to redefine urban development to be more holistic and sustainable. So Mikkel, tell us why the systems change is required, especially among the investor community.
Yes, thank you, Ed. And we are super proud and pleased to be part of this coalition. You know, it was, as I said, founded on the response to COVID in reality, and is obviously driven by this ambition that we need thriving, well-functioning cities, given the importance it plays for society at large, as you've just put out. And as you also put it, the cities did survive COVID. I think it's not fully as clear that cities, and not least inhabitants of the cities, will survive in the same manner unless we ensure that cities become a part of the solution of the climate challenge that we are facing, which I think we all can agree is one of the most substantial challenges facing the cities today. And allow me just to digress 1 second on that before I go and try to answer a little bit of your questions, which I hope I'll do also indirectly through this. But every time that I'm in front of sort of an esteemed audience of decision makers, I try to sort of make something very black and white, that I at least find very black and white. And that's why I travel around with these 2 very simple papers. Because I find it to be very black and white that there's a decision we need to make. And that decision is basically, what cities do we want our kids to live in 2050? For my own part, my kids will be roughly my age in 2050. And it's been very neatly outlined by the IPCC that there's this choice. It can be this city, or it can be this slightly brighter version, where our kids will be allowed to live in a similar planetary stability that we've been bestowed with. And I think that is black and white. No? Who would want, as a parent, to pass on this to your kids? And the reason why it becomes even more black and white, I make it even easier for you, is that also commercially, it's a no-brainer. So at its core, business is about solving problems. Those businesses that solve problems will always outperform those who do not in the long term. And given that the climate challenge is the biggest challenge of our generation, it must follow that it's the biggest business opportunity of our generation. And now we get into the show of hands. So as a show of hands again, who were in business? I'm not going to age shame you. I'll do it myself. But who was in business 20 to 25 years ago? Raise your hands. Okay. So those of you, keep them up. So those of you who were in business 20, 25 years ago, who of you regret that you, from a purely commercial perspective, did not invest a bit more into internet, or maybe started an online book retailer? Yeah, pretty much everybody, no? And if you should simplify this, in my head at least, then the internet improved productivity of the world, essentially. The climate challenge is existential. And as price elasticity on lives is quite low, I'm convinced it will have much more commercial impact than what the internet had. So I really feel it's black and white, that I hope few of you will be sitting in 25 years with your hands up when you say, I regret I didn't invest more into the climate. And that brings me a little bit back to your question, which is, so Urban Partners, we've been around for 19 years now. We are an investment organization. We are founded on this belief that you will deliver superior returns if you solve problems. And we've just chosen to focus on the built environment. And we have now 19 years of experience and track record that I think really starts to prove that solving problems in the urban environment is not just a nice thing to do for the kids, it's also a superior investment proposition. But we've realized on this journey that there's no way we can do it alone, because we need some systemic change. We need to change how we measure some things for this to become faster and more catalytic, which is needed because we are running out of time. And that's why we are so pleased to be part of this coalition. Because that's what it's all about. It's all about trying to bring together more who can help us make the changes that are needed. And that's why we are so pleased with the dashboard that's being announced today, because that is obviously an attempt to try to measure things in a slightly different way, looking a bit more holistically at things, so that we can try to fix this problem we have between the short-term financial measurements and the actual long-term benefits that you create when you do things in a way that actually benefits the whole society. So we very much hope that our work with you guys and being part of Bloomberg, who's always been on the forefront of talking for the cities, will help us both do this and deliver better returns to investors. Thank you.
Thank you, Mikkel. And that's right. We are so excited to be launching today the Bloomberg New Economy Dynamic Cities Dashboard. It's going to be showing up momentarily. In order to support this multi-dimensional approach that takes into account both the physical and the social infrastructure that goes into making great cities, that goes into making dynamic cities, we argue, the kinds of cities that attract the most and the best talent in the world, in both the emerging world and in mature markets. To get there, we believe cities should strive to be fair, happy, sustainable, data-driven, innovative, and responsive. And we've identified 18 different indicators under these pillars for an initial set of 30 cities to track and make progress on. Now, we don't have time to get into the specifics now, but I do want to point out a few ways in which our dashboard is different from a lot of the indices and the rankings that you see out there today. For one, we want to capture positive change, because we don't just want to highlight the cities that are already farthest ahead. We want to be able to build on momentum and to identify positive improvements. So if we were to take a look at our sustainable pillar, for instance, and the clean energy indicator underneath it, this ranking tells us which cities have made the most progress in terms of the proportion of electricity consumption that comes from clean energy sources, so non-fossil fuel sources. Lagos is at the top because it went from 0 to 25% of its electricity consumption coming from non-fossil fuel sources, mostly from hydro. And this happened in the last 5 years. Now, I know what you're thinking. Any jump from 0 is a big jump, and you're not wrong. But I ask you, is it any less worth highlighting? We think it provides an opportunity to say, hey, what's going on there? What changed? So if we look at a different city, at London, where we are today, we see that it made a jump of about 3%, which is positive, not all that much, but that's because it's starting from a much higher floor. Nearly 50% of electricity consumption in the city comes from clean energy sources. A lot of it is wind, a lot of it is nuclear. Of course, these two cities are in very different stages of development, which is why we've taken the time to identify 6 different archetypes according to GDP per capita and population growth rate, because we believe we need to make reasonable comparisons. Another way that our dashboard is different. Ultimately, what we want is to inspire city leaders to track data, to make informed decisions, and to replicate interventions that work, which is why we've also added a section for our case studies. This is one of my favorite things because we've added 2 video case studies, including from 2 cities, one in Copenhagen, one in Sao Paulo, Brazil, 2 very different parts of the world, but great examples of entire whole neighborhood transformations that take into account the social and the physical component. The Urban Partners case study in Copenhagen builds an entire neighborhood that is closely tied to all 17 of the UN SDGs. In the Sao Paulo case, we have a social entrepreneur on our coalition that is transforming favelas, taking hundreds of families out of poverty. We also think it's an opportunity for investors and for businesses to identify underexplored opportunities and build momentum on positive change that is already taking place. And then city dwellers, of course, to say and demand more from their city leaders. Ask them, why isn't my city making more progress on sustainability? We invite you to explore the data at bloomberg.com, Dynamic Cities Dashboard, and then to join us off stage during the networking session and dive into why the world needs more dynamic cities. Finally, I want to thank you, Mikkel, Urban Partners, our co-chairs, our coalition members that have been with us a few years now working on this project, and of course, Bloomberg for making and turning this vision into a reality.
Thank you.
Please welcome to the stage Francis Kéré, founder of Kéré Architecture, for a conversation with Bloomberg's Francine Lacroix. Please welcome to the stage Francis Kéré, founder of Kéré Architecture, for a conversation with Bloomberg's Francine Lacroix.
Thank you everyone, and thank you, Francis, for giving us a little bit of your busy schedule. I've been so excited to meet you because of really being a pioneer in what you do. When did you decide, and we're going to look at beautiful images of what you've done, of where you grew up, but when did you decide you wanted to be an architect and you wanted to make a difference?
Well, thank you. Thank you for getting me here. When did I decide to become an architect is a very important question, but as far I can think back, there are many things in my life that brought me to become an architect. First of all, you have to know that I have to leave my family when I was 7 to be able to learn how to read and write. So from that moment, I was living by relatives. I was sitting in classrooms that were very dark while there was abundant sunlight outside. And it was very hot.
And this is a picture.
Very, very hot. It's in my village, actually.
Of your village.
Yeah. So it was very hot inside. And you have to know that in 50 square meters, we were more than 100 kids, you know, sitting next to each other. And then something that, you know, within the heat, but something that marked me was, you know, we're kids. We will sit in the benches and we just play like this, and the benches will be wobbling and nails will pop out. And so I'm sorry to say that, but it may hurt your best part, yeah? your bottom. And I couldn't accept that, all of that. So for the benches, I knew there is a carpenter on my way to the school, and I went to intern. As a 9-year-old boy, I went to intern to fix our bench first. So there's a lot of things that brought me, you know, to become architect. So one day when I had the chance, I decided to become a carpenter.
That's amazing. But so it really started out of actually making education better. It started as actually putting a community together that could learn together to then better lives.
Yeah. So now it's like I started, and then I became a carpenter, and I was in the capital city, Ouagadougou, waiting for job opportunities. I started to work as a carpenter just to earn some money. And then, but I went to school. A carpenter, and you may hire yourself, especially when young girl was passing, they may know you, educated person, just fixing benches. I tried, but then luckily I won a scholarship that brought me to Germany to be further trained as a better carpenter. So there.
So this is age 20?
Yeah, 20, very young, 19. And so there I arrived and I felt, wow, I'm in the country of abundance, a paradise. So I'm not talking about chicken, about the food, no, the abundance. I was intrigued that you could access education. And so I started to ask these people that brought me there, look, I know how to make furniture, I know how to make a roof for a building, I want to know how to learn to layer bricks. Then I will go back to Burkina and will build for my community. So they told me, no, Mr. Kéré, this is impossible. So you came for one program, you cannot do the other. And during discussion, they said, what are you thinking to do? Sounds like you want to become an architect. I said, oh, wow, cool. What is that? So, you have to become an architect. At that time, I didn't know what is an architect. I said, oh, it's gonna be cool to become an architect. So, but how can I become architect? You have to study. So I had no high school degree. And they said, yeah, you cannot. I asked them, where can you do a high school degree? And they told me there is a school at night where adult, because I was past 20, where adult can do their high school degree.
But Francis, at the time, what did you understand an architect was, or what an architect could do?
At that time, I understood there was someone who could make furniture, who could make a roof, who could layer bricks and make a house. And I wanted to become that guy. So this is the moment where everything started. And I had to go to an evening school in Germany, 5 years. I mean, some of these teachers are still alive. 5 years. And during the day, I will work, which is normal. We all do work. And then I will do a school from 6 to 11 p.m. And after 5 years, I graduated and I went to university.
And that's resilience.
Yes.
I mean, it's resilience. What do you think? You know, a lot of people look at your projects and say they're beautiful and they're actually so different. Yeah. But do you think, is it really resilience and that wanting to do something better for your community that made your success?
Yeah. So first, my dream was always to make myself useful for my community. I am a member of a community, a very poor village, where there is no life insurance, no driving insurance, nothing but the security of the community. And everyone has to contribute. So I went far away from that community, and being in Germany becoming a student, 2 years later, I was thinking, wow, what can you bring back home? Because they haven't seen you for more than 7 years. What can you do?
So did you feel pressure to deliver?
Yes, pressure, and later the envy to contribute to the growth of that community. That's why I started as a student to design a school at university. And as a student, I was able to build my very first school made out of clay and rebars, clay from the village, and to create a building that no one has seen before, but with the community. With the community. Why? Why? I can tell you. We are a very remote place, and no one has a chance. I was the very first to attend education, so to learn how to read and write.
Of your whole village?
Yes. So what you do in my head was, okay, if you want to succeed, you have to get everyone to be part of it. So, and I wanted, if in the middle of way a collapse, that happened in human life, you know. Nature is nature. And I just wanted to, let me put it this way, but I don't want no one to feel pity about me. I was saying, if I fail and die, I want at least one person in the village to be able to continue this work. It was like logic, it was like practical. So I didn't know that what I was doing would have that impact today. But it was just to take the existing material, what people know for a long time, and get people to be part of it to create a school.
But beautiful school, right? So you have a compass almost in your eye. What inspires you? And I think these are some of the pictures, actually, of what you built.
Yeah, inspiration comes from nature first, but also from traditional architecture. Sometimes a canopy, a shelter. Providing shadow can become a classroom. I am very inspired about that. But I had the chance to access the Western world, where I discovered a lot of examples, and I love the rationalist architect, just trying to do with little mean material and resources a lot. And in Gando, I had a lot of clay and a lot of people, and people that love beauty. And so I said, if I can succeed, I want to give to my people the most beautiful school in the area, and then the most comfortable schools. And that has been my drive until now. So creating beauty, be it for you, if you ask me to do, I will do my best to achieve that. But for my community, I wanted them to have luxury in terms of comfort, but in terms of something that I can look and say, we were proud, we were part of the construction. We
with
did
very
it.
simple materials, because there is a belief in a lot of Western countries that actually sustainability comes at a cost, that the materials are expensive. And you've gone almost against that to show the world that you can afford beautiful things done with sustainable materials. Does that work elsewhere than actually in Africa?
So first of all, yes. Prior coming here, if you Google, you will see that I launched a kindergarten in Munich, actually where I'm teaching. And it has been well received, but for me is again the pressure, because I have to succeed. So we're building a vertical kindergarten, completely out of wood. Germany has wood, but we want to be radical, not in terms of aggressive, but in the way you use things, to say, okay, let's use the wood as much as possible to reduce all the other materials. Let's see what it will be. And I mean, it is Germany, you're building for the most fragile part of the population, and you want to build a vertical kindergarten 5-story high, and you want to completely use wood. It took us about 1.5 years to achieve that. And this is the problem where we may face in the world. But about cost, I don't think that we're going to have a good world if we're afraid about investing. Everything should be cheap. For me, our world has become cheap because of these people thinking cheap is the solution. No, that's why we're sticking in plastic. It has to be cheap and fast. For me, it was important to be resilient. No, what is resilient? Everyone is saying those kind of words. I have to be there, with my people constantly, showing that it works. That is what I'm talking about, resilient. And it is important to have sponsors, investors that are thinking on the long term and not very quick and cheap. That's why we don't have good projects in the world.
Have you seen a shift, or do you have more backers, more people that actually are interested in beautiful things for the longer term? Or was that for a while and then actually shifting the other way?
Yeah. Oh, yes. Oh, yes. So when I started, people would say, oh, it's the little guy building little school in his tiny little village. Actually, Burkina Faso have a huge workshop with young people that are trained. Oh, they're not young anymore because we started together, and they can do what we're doing. And we have a lot of people asking, I know that your way of building using the material is expensive, but that is the better way to do. They started little NGOs started to ask for schools, but now even private people are telling me, we know that is the best way. The material is good to human being, but also the result is live longer, and then you don't need a lot of energy afterward, and there's no maintenance. People are asking, while in the Western world, people get inspired from what I have been creating, I'm getting a lot of demand, of course, and that is my little problem. I love to work, to create things that make the difference, being on how it looks, being on how it's inspired people. But now I'm facing a little problem because those projects are taking me away from my community to be able to do that. And I think these are what they call brain drain, So I'm excited to work with people abroad, but it's taking so much time. And what I'm feeling over the years is my people, especially the women, are saying, we don't see him anymore. We cannot sit with him and talk about the future anymore. He has no time. And so, but it's contradictory.
It's a good problem to have. It's a good problem to have because actually, as you grow, and we'll see also images of some of the beautiful things that you've built. The Serpentine Pavilion here. Some of the other. Do you have a favorite project? I don't even know if I should ask you.
No, I have many favorite projects, but my absolute favorite was the primary school that I built. As a kid, you come back to your village in a place where education is about walking with your grandfather, your grandmother, or your mother for years to learn to do something. And I just left this village. I come back and say, guys, come together. We're going to build a school. And they was looking, what? We haven't seen him be trained as a builder. How can he do that? And, and we start to talk. We made bricks out of the clay. And we built, raised a wall 1 meter high, and then the first rain came, okay? And then I was sleeping, and I got noise, and I wake up, I realized it was the women from the village, and they're coming to my car. I said, we already have a lot of meetings, and we know we're gonna work. Why are they coming again this morning early? And I didn't get it. And before I complained, my brother came in and said, I have to tell you something. Did you hear the women? I said, yes, I heard. What was happening? No, they was coming to consolate you because in our memory, if a clay building is not finished and the first rain comes, it will destroy it. And so for them, it was sure the building was destroyed. And they wanted to consolate me so that you don't hurt yourself or you don't get. But then it was like a miracle.
It was still there.
This emotional thing, and that what we have seen made this building so important to me. Really very, very important.
Franz, it's amazing hearing you speak about how proud you are about what you've been able to give back, and this is also how you design a lot of the buildings, is trying to bring a community together. We're looking at the Serpentine Pavilion. Can you talk to us about the first time that you won a big prize? You've won many prizes. There's one that is like the gold standard for any architect. Did you feel joy or did you feel pressure?
I was surprised first in 2004 to win the Aga Khan Award. That time I was already a little bit shy because I had to go to India to receive the prize. And I didn't know what it was. But it was a very important prize, as I realized later. And then, but why I was sad? Because I will be celebrated far away from the community that has brought effort to help me realize what we have done. But the prize was good. People start to dig and see how I was doing. And eventually, some people start to invite me to give lectures, to talk. It created a visibility. And then, and so on, we got a lot. And then, but of course, two years ago, I won the Pritzker. I still don't believe that I won it, that it is me, really, honestly. But it came, and it came with a big pressure, you know, but also joy. But also, it's at the end of the day, it's grounding me because I'm saying, wow, is you, Francis, or is this someone else? I'm still asking questions about me. But the quality of the man has totally changed. Yeah. So that's why I have to say, prices are great, but also good clients and good sponsors are good, like this Parliament House in Benin. You know, normally I will come with an inspiration. In London for the Serpentine Pavilion, I wanted to bring a big tree and I dressed blue like you, really, because blue is the color of a favorite in Burkina Faso, you know. That's why I love it, because for your first date for a young man, so going to meet his girlfriend, you have to dress blue. So if you dress blue and you walk toward the savannah in my place, so all the young competitor now is done. So, and for me in London, I just wanted to show me with my best. That's why I love your dress. It's inspiring me. I wanted to create a blue pavilion. And I was inspired by the color of my culture, by the celebratory character, and I did it. But the Parliament House in Benin, it was different because we in Africa, because of the colonial power did a wonderful work, you know. They make us believe that what we have has no value to be, you know. Yeah, they did a wonderful work. So for me, if there is a big commission there, I try to provoke and to see if they really want me or not. For the Parliament House in Benin, I wanted to create the Palava tree. The Palava tree, for those that has been taken away from their culture, it is now something primitive. Why he want us to go back to, you know, to a Palava tree? But because I see democracy in Africa is sick, because we have been far from our roots, from our cultural habit. A Palava tree is where you meet to discuss the daily life of people.
So, Francis, this is basically the shape of what we're
Yes,
seeing,
the shape
right? The
it
fact
is.
that it looks like
Yes,
it's branches
a tree,
coming
like
out.
a giant tree. And so when you say to these people believing in modernity that I see as a copy of the West, so they kick you out. So you will not succeed. Because it's big, sometimes I'm happy that I respond, but sometimes if you don't respond, they may say, oh, he's famous, but the country and the continent is calling him, he's refusing. But in this case, I met visionary leaders that exactly wanted to have something like that. And so inspiration to me coming differently, sometimes learning from my culture, but sometimes a big tree can be the inspiration. A Buckingham Palace with a park as a green lung for the population of London inspired me to create a giant tree where people can come and gather.
I mean, you said democracies are sick. Do you feel yourself political, or actually, you know, finding through architecture and beauty a political voice, a message?
Yeah. So yes, so architecture can have a symbolical power, but to be political yourself is difficult because I love design. I want to spend time in that. To try to introduce symbols is to make sure that you create peace. You know, if people believe in the symbol and you try to give them back this symbol, then they feel bespoke and they will rely the idea. So I don't think that I have the skill to become a politician, but I love design. And you know, I don't have the skin to swim in the same sea with politicians. Is another quality. That's why I stuck by design, that I really love a lot.
But it's also amazing when you read about diplomacy. It's actually the size of a room, how close you are to someone you need to negotiate with, and foreign policy actually makes a big difference.
Oh yes.
Do you and it seems that in all of your design you think about that a lot to I guess bring people together and get them to talk more?
Yeah. So it's a social project or an urban project. I think it is important to get everyone be part of it and not to be surprised later. A building first mobilizes a lot of resources, but the building affects every one of us, and you don't want to have an ugly, nonsense building in your neighborhood. So a building should inspire, should have a purpose, should provide comfort and everything to people, but also become something inspiring within a community, within a neighborhood. And that way we have to communicate, and then that way you make the building be accepted, become our. But if you just come and say, I have the money, I will implement it, then don't be surprised that it's not accepted, So,
how would you design maybe a city of the future? So we all are digitally connected, we speak to each other less. It seems that there's less of a sense of community. Yeah. Would you design London or Berlin differently than what it's designed now?
First of all, I will not design London and Berlin, potentially Berlin, but I will not design London differently. You have the traces of generations, So that is a saying of Newton. Isaac said, if I came further, it is because sitting on the shoulders of giants. So a city needs to have the traces of generation that has passed before us. And here lay the struggle of creating a city out of nothing. So, and then the other problem is we want to have it fast and cheap. And that is not working. So I would love to design part of things in London. I could, if it doesn't take me a lot of time from my community. So except if there is a compensation so that my work there can be done. I think it is important in cities nowadays that we more put community interest, so in the center of interest, when designing. And this has been neglected. Public space, so comfortable public space, free accessibility for all the members of society, And so those are elements that we have to take under account if we're designing a new thing. I think we're making the mistake to think that things are impossible. This is not true. There is still a way to improve. We need to have the political will, but also be ready to put resources in that, because it's about human beings.
Do you like or dislike the word sustainable? Because a lot of people are saying, it's become something that actually doesn't speak to people, whereas how you design is local. It's people that speak to the community. It's buildings that last.
Yeah. It's a problem with sustainability. I feel that those that has the capital power to buy an etiquette and drop on the project call themselves sustainable. But the status quo is not changing, and this is the problem. With the financial power, they throw us an etiquette, I am sustainable. What I'm doing is sustainable. But in the deep thing, in the depth of the thing, nothing is changing. So that is not the way we will create a better future for our people. No, that's not. So that's why I'm afraid about sustainability. But deeply thought, starting to do things like me, when I start to build, I never knew, encountered this word sustainability. But I knew from my heart, from deep in me, if I take the most available material that people knows and I improve it a way that it can inspire my people, but have a long-lasting life, this is good. If I can get people to be part of it and learn new things, sharing knowledge, I knew this is important because we're not called, Francine, we're not called to stay forever here on the planet. But if you teach people to do things properly, rather than to teach them to make very fast business, always business, fast. So, if we teach them properly, if we go, they will go, keep doing like what we have done. And so
that's almost the real sustainability, right? It's putting it right for deep-rooted.
Deep, and you need time. Like me, what most people doesn't know, to build my very first school, I had to look for money. And here comes the problem. I am a student, I have no money. What to do? People will say, we know you love your community, but okay, money, money, money. So I created a structure to be able to finance this project. But still now, I'm constantly putting things in that to make sure that I get my homework done while I'm talking. Mostly when people talk about things that are sustainable, it's already old coffee from yesterday. It already failing, but they keep going with the brand we're sustainable. And that's what I want to avoid in my work.
You're inspiring also a new generation, actually, of architects in Africa. You are becoming, frankly, more famous almost by the day. What do you want to achieve in your lifetime? Like, how will you measure success?
Yeah. Well, first of all, to be able to withstand pressure. Of course, if suddenly young people come and see or texting you or trying to paint you, sending you things to me, sending, and so I got your picture from internet. I am from Ghana. I'm studying, different places, sending you pictures, and you start to say, wow, my gosh, I'm Francis Kéré. I'm an architect. I just wanted to build a school for my people. I don't want to be recognized in the road, but nowadays if you say, picture, photo, you are under pressure, but at the same time you realize you cannot be aggressive because you have done something that these people love. That's why they want to gather with you. And so that is a pressure for sure. I want to withstand this. What legacy I would love to leave is to make sure that in my village I have infrastructure. So long when I'm gone, things are still working. Then I have done my job. And if some people get inspired through my work and then try to engage themselves for their community and create something that is inspiring for everyone, I will be happy. So, the work I'm doing can be seen as a builder of bridges. If I can build a stronger bridge, I'm talking about the next generation. So to enable them, that is what you hope. But just create another museum somewhere or thing, it is good for me. But at the end of the day, I will be measured to what I have left in Gando, where I started, with these people, where the work has given me this, allowed me to have this visibility.
What's the best piece of advice you would give to someone young who wants to make a difference actually in this world? In architecture or with something else?
Wow. I'm not the right one to just do that.
I think you are.
Yeah. But with the pressure you have, and then you try to be the good one, the fancy guy, the intellectual one, I have no advice then to believe in yourself and really work hard. When I started, no one would have imagined that I will be able to see my name connected with Aga Khan or Pritzker or sitting at Bloomberg to talk about sustainability, about future of sales. No. Myself, 5 years ago, if you told me that, I will say no. I will never imagine. So I will encourage everyone to believe in what you're doing and not try to run after the newest of the newest. Just be consistent. Just work on things that matters for you. Really, at the long term, it pays.
Francis Kéré, thank you so much for your time today. Thank you very much.
Thank you.
Hello. Okay. Hi. Thank you so much. I would hold for one quick second if you can, because I have some instructions for you about lunch. So before you get running, just a couple of quick things to say. First of all, thank you to Francis and to Francine for that. That conversation was amazing. I'm glad to hear that I was wearing the right color today. So that was amazing. We have lunch right outside, and lunch will go until 2 o'clock. But we also have our facilitated networking, which will run out there starting at 1:15. So we have 3 different topics. And all of them are run by Bloomberg moderators. Dynamic cities, so you can talk to Elizabeth about the presentation that we just had. Renewable energy with Noon, and then sustainable finance with Ido and Rohit. So please feel free to, you'll see some signs and some designated areas out there that start at 1:15. Just find the topic that is most of interest to you and join, and you can talk about that with others that are interested in it. And then one other quick thing to mention, if you are interested in a complimentary 3-month corporate subscription to Bloomberg News, you can scan this QR code to find out more information there. So go ahead and scan that. I'll get out of the way if you need it. And we will be back here at 2 o'clock with the programming. So we'll see you back in here then. Thank you so much.